So Meta is basically fighting a war on two fronts right now, and the stakes couldn't be higher. On one side, you have this incredibly expensive, super ambitious push to conquer the future of artificial intelligence. But on the other, there's a desperate defensive battle to protect the advertising kingdom that's supposed to pay for it all. Let's break down these two battlefronts and figure out what they really mean for one of the most powerful companies on the planet. And look, to get a sense of just how big this AI offensive is, you don't have to look any further than the CEO's own words. Personal super intelligence. I mean, this isn't just about making better chatbots or some smarter photo filters. We're talking about AI assistants that know what you need before you do, that manage your life, even help you learn new things. It's a fundamental shift in how we use technology. Honestly, its goal is so ambitious, it feels like science fiction. But Meta has put a surprisingly close deadline on it, 2026. So, what's the price tag for this AI moonshot? Well, take a look at this number. We could be talking about a war chest of $135 times billion in capital expenditure for 2026 alone. That is a staggering amount of money. And that's the cost of just building the arsenal. The data centers, the chips, the raw infrastructure you need for an AI empire. So the big question, right, is how on earth do you pay for a war of that scale? Well, the answer lies in the incredible power of Meta's current business, an engine that, according to some analysts, is absolutely firing on all cylinders. Okay, so this table here really lays it all out for us. This is a look at that financial engine. And just look at this. You see how Bank of America's forecasts are consistently higher than the Wall Street consensus, which was already pretty optimistic to begin with. This isn't just good news for them. This is the literal financial fuel for the entire AI operation. It's the extra cash that gets taken from the bank and sent straight to the front lines of the AI war. And this right here? This really gets to the heart of the whole thing. Think of it like this. The old school advertising business is just a cash machine. It's printing money day in and day out, and that money gets funneled directly into building the AI of tomorrow. The returns from that ad business are, well, enormous. But as one portfolio manager pointed out, those returns aren't coming from the AI projects, at least not yet. But, and this is a huge but, this is exactly where that second front of the war really opens up. Because while Meta is pouring all these billions into its AI offensive, a whole bunch of new threats are popping up and attacking the very advertising business that's paying all the bills. And you better believe this is creating a whole new kind of anxiety for investors. You can literally see the conversation around Meta shifting right before our eyes. For years, the market was obsessed with the stuff on the left, earnings, user growth, you know the drill. But now, all eyes are on the anxieties over on the right. Investors are asking two massive questions. First, is this AI spending just getting completely out of control? And maybe more importantly, can the core business survive this tidal wave of legal and regulatory attacks that's coming its way? And what are these attacks? Well, we're not talking about just one little problem. This is a full-on global gauntlet, with battles being fought on all sides in multiple countries all at the same time. Let's start right here on the home front, in the US. First up, a smart glasses maker is suing for, quote, multiple billions over patent claims. Then you've got a lawsuit challenging one of WhatsApp's most basic promises, saying the company can actually access your private chats, a claim that, if true, strikes right at the heart of user trust. And to top it all off, there's a new bipartisan Senate bill targeting scam ads, which could force brand new and very expensive liabilities directly onto Meta's platform. Okay, the second front has opened up in China. Beijing is taking a very close look at Meta's $2 billion acquisition of an AI startup called Manus. And what started as a pretty standard national security probe has now blown up to include things like currency flows and taxes. If this deal collapses, it's not just a financial loss. It's a direct blow to Meta's talent and tech pipeline for its AI war. And the third front is in India, one of Meta's biggest markets by far. The country's Supreme Court is threatening to bring back a ban that would stop WhatsApp from sharing user data with Facebook and Instagram. That would be a huge blow to their ad targeting. And there's a critical hearing coming up on February 9th that could totally change the game for Meta in one of its most important markets. So when you put it all together, you see the core conflict just crystal clear. You have this aggressive, forward-looking push into the future of AI, and it's being funded by a legacy business that is, at the exact same time, under siege from regulators, lawmakers, and lawsuits all around the globe. So what does all this mean for investors? Well, this slide shows the key risks that are like an anchor, just threatening to drag the whole company down. The privacy issues and new regulations we just talked about, they directly threaten revenue. And meanwhile, you've got Wall Street looking at all this massive spending on the metaverse and AI and basically saying, is this just a giant black hole for money? They're essentially assigning a negative value to these futuristic bets. And that all boils down to the one single question that sums up this entire two-front war. It's the question that probably keeps investors and maybe even Meta's own executives up at night. Meta is building an AI empire, but can its advertising kingdom survive long enough to pay for it?